Hey guys, it's Dave here. Thanks for watching as always. Hope you're doing well in these markets. Looks like Rocket Lab stock is still doing Rocket Lab stock things, kind of range bound here, up to, 5-ish down to 3, and we've kind of been dropping a little bit lately, but we're still, well up from the lows. So that at least is nice to see. Today I have a video for you from a recent conference. Aeropspace had a discussion on a lot of financial aspects of the company, as well as some more material things. But for me, a lot of the important things are actually the numbers. I know a lot of you out there, you might have your eyes glazed over when we start talking about margins and how large the backlog is. And, when we're breaking even and just talking numbers, you might find it a little more boring, but it's actually extremely important for when it comes to building your model for how much you think the company is going to be worth in the future. And, some of these numbers, even a few changes percentage-wise in the margin can have a massive impact on the business in the future as they continue to scale. So a lot of interesting updates, and I just wanted to share what I thought were the most interesting ones, the most interesting takeaways. Of course, the full video is posted on Rocket Lab's investor relations website. These are just a few shorter clips I'm sharing with you. I tried to cut it down. Still might be a little on the long side, but I always find these so interesting. So if you are a Rocket Lab investor and you're new here, I definitely invite you to subscribe. I come back with a lot of videos on investing and a lot on Rocket Lab specifically. It's one of my bigger holdings. With that out of the way, let's go ahead and listen into what Aeropspace had to say about Rocket Lab's latest updates.
Yeah, we have a manifest that'll support the 14 launches this year. We had an issue at the end of last year with weather, but it was a combination of weather and also just getting everything finalized with the FAA and NASA for our first inaugural launch out of Wallops. We think we've got those teething things behind us because now we've had the successful launch and we can now begin to look at really ramping the cadence at Wallops.
So just a quick update there on the launch cadence for this coming year, 2023. I know there's a lot of people concerned out there wondering if they can still hit that 14 launches for the year, given that the start of the year has seemed a bit slow for launches, and he still seems pretty confident that they'll hit that 14 launches for the year, which is nice to see. Hopefully those Wallops problems are behind us, and we do have some launches coming up soon.
Reusability is an important part of our Electron margin improvement plan. So it's definitely key to get to our target model of a little bit north of 50 points of non-GAAP gross margin. We will be attempting another helicopter recovery attempt in the first half of this year. We can't say whether it'll be the next one or the one after that. It depends on which launch range it's coming out of. Right now, we're only attempting recoveries out of New Zealand. We will eventually get to the point where we have recovery operations out of the Wallops site as well, but right now it's New Zealand.
So the important piece of information there, or the most important, I think, is the 50 points or over 50 points for gross margin is the target for Electron. Obviously, they're not near that yet. There's a lot they need to do to get there, but that's a number that I can put in my financial models, seeing how much money we think they might make in the future. And even if we want to play it safe, we could go under, seeing what might happen if they don't quite reach that gross margin that they're looking for. Also, good to hear the updates on reusability. I knew that they weren't working on reusing Wallops launches right now, but nice to hear confirmation that they will in the future.
On the second recovery attempt, we actually had an issue with one of the parachutes. So it wasn't like the helicopter issue; it was the parachute on the rocket that basically failed. And so we're kind of narrowing in on kind of how to really do this.
Yeah, this really confuses me because I was under the impression that Peter Beck tweeted out the issue with the second recovery attempt was they lost telemetry with the rocket. I'm very confused to hear him say that it was an issue with the parachute, unless maybe the parachute didn't deploy and therefore telemetry didn't come back in time. I'm not sure. That one's odd to me. I want to look into that a little bit more in the future.
I'm not sure what it says about our competitors or the market dynamics, but I would say that we're not seeing a lot of meaningful payloads being kind of reallocated. So we saw the NASA Tropics missions that we got back that Astra had originally won, but when they failed the first mission, NASA basically kind of redirected those payloads to Rocket Lab because the importance of getting them on orbit. But what you're really seeing with a lot of these aspirational launch companies, it could be whether it's the Fireflies, the ABLs, the Virgins. A lot of this was, in my view, and our view as a company, was that it was the government trying to seed competition, get new entrants to the market. So they weren't putting a lot of high value payloads into these early kind of what we call seed programs.
Right.
And so, as a result of these folks failing, we've seen a few payloads come loose. For example, what we've heard was that the payloads that were from Amazon's Kuiper initial launches have moved from from ABL after the failure over to ULA. Of course, we talked about the Tropics missions coming to us, but for the most part, it leads me to believe that a lot of these aspirational launch companies, as they talk about their backlogs, they're probably not real backlogs. It's either like they were kind of non-binding MOUs or something that would indicate that there's not a lot of contractual kind of commitment behind them, or else you would see those coming back on the market. And since there's really only 2 operational dedicated launch providers in the US that's got any Cadence, ourselves and SpaceX, we're just not seeing a lot of that.
It's a little disappointing to hear. I thought we might get some more launches from, say, Astra, who obviously had the big failure and canceled their entire rocket, their smaller launcher. And also ABL had a recent high-profile failure. We had Firefly not deliver their satellite to the correct orbit, and it re-entered much sooner than expected. We've seen issues with Virgin Orbit. So I was really hoping for some more launches to come our way, but it doesn't seem like it's happened. It makes you wonder, these big backlogs that some of these other companies have been touting, what are they? How real are they? You got Relativity talking about like $1 billion plus backlog. I wonder how real that really is and what these payloads are. Interesting to hear about the Amazon launches. I would love for Rocket Lab to get some launches for Amazon once Neutron comes online. Obviously, I think Electron would be too small to really be too useful on that front.
And then when you look at the cost to operate our launch range in New Zealand, we got about $1 million a month of fixed costs related to that. And that's directly, again, you launch twice a month or 3 times a month, you get to amortize that over a greater number of units. Virginia is a little bit different because Virginia, we have basically a fixed cost, variable cost element that we pay to NASA and Virginia Space to support the launches. So we don't have that same high fixed cost nature in Virginia because they maintain all the infrastructure and so forth. So the 2 sites are a little bit different, but it's really a combination of BOM reductions, labor efficiencies, cadence, and then also, as you talked about earlier, the recovery of the vehicle. So our model assumes that we recover 50% of our Electron launches. And it's not 100% because depending on the trajectory that we're taking out of the range, it can go too far offshore to be a helicopter recovery. It could be at night. Maybe over time we could figure out technologies to be able to do night recoveries.
So a lot of interesting information there. Personally, I've tried to develop a model that will predict how much money they would make for how many launches. And one of the important things you need to know there is how much costs are fixed. So, for example, if their fixed costs are a certain number, then obviously adding more launches doesn't increase that cost and there's more profit. So hearing that number of the fixed cost for the launch pad in New Zealand, the launch complex in New Zealand, good to hear to add to my models, and obviously the 50% reuse number as well. I think I already had around 50%, but good to hear the confirmation on that as well. And hopefully, they can figure out how to reuse them at night as well in the future.
Yeah, I think we still have confidence in our first launch at the end of 2024. I think we're going to need every bit of 2024. I think I wouldn't expect it to be around the middle of the year. I think early kind of end of year it's a stretch target, but I believe currently we can get there. Keeping in mind that that's the first launch of Neutron, right? So I think when we think about to really enable the model for Neutron, we're going to have multiple Neutrons. They're reusable, but ideally we see a fleet of maybe 4 of Neutrons that are being rotated as a fleet. And that will take a while longer to get that fleet built out. And then of course, with that number of vehicles, you need more infrastructure. So Neutron's going to be a longer term investment for the company. We talked about when we came public that it was going to be up to $250 million project. That's to get Neutron to the pad, the first Neutron to the pad. Beyond that, it will take more investment.
The cost, what's the cost going to be?
A little disappointing to hear that. So obviously $250 to develop a brand new rocket and get it to the pad was pretty cheap. But now we're kind of hearing that's sort of the beginning of the spending for Neutron. We're going to have to make more rockets, obviously, in their fleet. There'll be more infrastructure costs. And he wasn't that confident on the timeline of getting their first launch by the end of 2024. I've always been a little unsure about that. I won't say skeptical, but I've thought I would not be surprised at all if it slipped to 2025. Rockets are often late, so obviously his confidence on that is not that strong either. And I think we just might have a bit of a longer road to profitability due to some of this Neutron spending than perhaps some of us thought. So definitely go over some of my financial spreadsheets later on after this information and try to rejig my models and see how much I think it's going to be worth in the future.
Of kind of getting the 4 vehicles beyond the 250.
Yeah, that we're still working on it. It's the cost of the fleet will be very different than the first 1 or 2 Neutrons, which are going to have a lot of handmade kind of, for example, if you look at the tank, the carbon composite structures for the first vehicle or 2 are all hand laid up off of molds. But, right now we've already, we've placed orders and are preparing for the arrival of, like, for example, automated fiber placement or AFP machines to do the automated kind of layup of the tanks. So we're still working through what we think the ultimate production cost will be for the fleet versus the first few prototypes. We also are driving the design so that these vehicles can be used, upwards of, say, 20 times, right? So you'll be able to amortize that cost over a great number of launches. But we're still dialing in with it. And as we get more clarity on what we think the production costs are going to be, we'll certainly share those with investors, but it's a little early for that.
I wonder how firm that 20 use number is. I don't know if we've heard that for sure before. I know we've already seen Falcon 9s getting well above 10 uses, so maybe there's even room to go above 20. It'd be interesting to see on that for sure.
So do you have your first committed customer for Neutron, and when do you expect to announce that customer?
So, we've mentioned before that we ideally, given the timelines for first launch, we would want to have a customer announced in the first half of 2023. That would still be our goal. Let's say right now we don't have anything that we are able to announce or discuss.
Do you feel relatively comfortable that you can announce that you will have a committed customer by mid-year?
I couldn't sign up for that right now.
Okay.
I can't come. Yeah, no, I think it's a bit too early for that.
This is one thing I haven't been as worried about as some other people. I think if your rocket is still a year and a half away from its first launch, and you're not entirely clear on the timelines, you don't necessarily have to, have committed customers quite yet. I'm sure they want to, have more certainty on launch timelines as well, and they'd come out of the woodwork a bit more when the rocket's actually ready. But yeah, he doesn't seem too certain for sure that we'll have a customer announced for Neutron by the middle of this year, so that's we'll wait and see on that. What I do hope, though, is that when we start hearing these announcements, they're for multiple launches and for constellations, not just like we're announcing one single customer's one launch.
The components business, as you mentioned, we've acquired 4 businesses. The attitude direction control business that we acquired from with a company called Sinclair, doing very, very well. We've got a mega constellation customer for the reaction wheels that'll start ramping very shortly. And then if you look at the ASI software, the command and control software, that's also doing very well for us and proving to be very strategic for our own internal programs. The PSC acquisition, or Planetary Systems, the separation systems, they just won their largest order to date, so north of $10 million worth of separation systems. So that business is building very nicely. Now, the Solero business, it actually is doing quite well from a strategic perspective, in the fact that just like a lot of people see a shortage of launch in the future, we see a shortage of qualified solar capacity as these constellations start to grow. So we feel really good about where that business is at. It did come with challenged gross margins, and we're increasing the gross margins. We're seeing flow through on or kind of a lift of the gross margins over time. And what we're seeing is that we really have to burn through that legacy backlog. They came with about 150 million of backlog, of which about 100, there was one contract alone that was fairly large that was coming at significantly compromised gross margins. That's got to kind of burn through the system. But I could say that the pipeline of opportunities that we've been winning, and there's been over 50 incremental program wins or add-ons to existing contracts since we've acquired the company. And the vast majority of those are at or above our target gross margin model of 30 points. So I think that the business is going in the right trajectory from a gross margin perspective, and we think it's very strategic that we can point, and reserve capacity for our strategic satellite programs that will be very unique in the industry. And I think that we think that's going to, position us really well going forward.
Right.
Yeah, so I think I've said it before, but yeah, I really don't have a lot of concerns when it comes to the space systems side of the company, where they, are selling parts and manufacturing spacecraft and that kind of thing. I might even go so far as to say, if Rocket Lab didn't have their space systems, if they were a pure launch play like some of these other launchers you might be looking at, I don't know if I would be interested in. I really like having the satellite manufacturing capability, and obviously eventually, hopefully, building and operating their own satellites in orbit, where the big future total addressable market lies.
Ultimately, we're tying together launch all the way through on orbit operations so that we can have more quivers, more arrows in our quiver that we can fire and compete. And we found that to be very valuable. In the case of of the MDA Globalstar contract, I believe the only reason why we beat out much larger incumbents for that is because we were bringing more parts of the solution to the table that they didn't have. And right. I think that's where you kind of come back to launch, where launch is it's the most difficult thing to do. I mean, the spacecraft side of things is nothing is easy in space, but launch is by far the hardest thing to do. And once you've got that scarce, hardened platform for launch, you can really, really use that to your advantage in selling other things to your customers and aggregating kind of meaningful platforms together.
Yeah, I mean, I've harped on vertical integration and how important it is many times in the past, so I won't say too much more on that, other than I think it's great that they have all these different aspects vertically integrated.
The new, and we made a press release a couple of weeks ago on the 12 Newton meter reaction wheel. So that's a much bigger reaction wheel than Sinclair had ever done as a standalone company. And that's really targeted at that one mega constellation customer that we haven't been able to name, but hopefully once they start, launching those satellites, we'll be able to disclose who they are.
By the way, guys, I'm very curious. Who do you think this customer is that they're not allowed to name for these large reaction wheels for Sinclair? If you have an idea, let me know in the comments below. And while we're at it, if you're still watching this video, please consider throwing me a like and subscribe if you haven't already. I would definitely appreciate it.
That's what that has really enabled for us is, it's such a high volume. When we acquired Sinclair, they would typically manufacture about 150 reaction wheels a year. So a relatively small number. And now we enter into an agreement with a mega constellation where it's thousands of reaction wheels per year and much bigger reaction wheels. And what that allowed us to do is build a dedicated high volume production facility in New Zealand that we brought the cost down by almost an order of magnitude on those wheels. Now, the ASP came down quite a bit as well, but now we have the ability to produce reaction wheels at a much lower cost, and for lower volume customers, still charge them the higher price. So a huge margin juicer for us on that side. So it was a hugely enabling thing. So the reaction wheels are doing great. So
yeah, good to hear Sinclair's doing well. As I said, I don't have a lot of concerns with how that side of the business is executing. This new contract was nice to see for sure.
Across the board, I think we're not seeing margin compression across any of our businesses. We're seeing margin expansion.
That's good.
Because part of the problem with the space industry historically has been lack of volume, very kind of bespoke solutions. And I think the promise, or kind of now that these larger constellations are moving from conceptual to practical deployments, the volumes are starting to come through. And with that, you'll see the advantages of scaling up and getting the economies of scale on them. And we're seeing that in our business.
I mean, I had no idea they only did 150 reaction wheels per year. That's such a small number to me. These are companies worth millions and millions of dollars. Very surprising. But yeah, it just goes to show how important it is to scale up and get these larger contracts.
As well. Well, so we got a pretty good, sugar rush of backlog growth from the acquisitions that we did, right? Especially Solero, because it came with that 150 million of backlog. And then we signed a very big contract, the MDA Globalstar contract, in February of last year, which brought $143 million into backlog. So we continue to add to our backlog on the launch side, but I think that we're now at a point where we're selling fewer one-off Electron deals, and we're signing 3 to 6 launch deals, and so those take longer to cook. And we're chasing much bigger satellite component and satellite manufacturing contracts, and those take longer to bake as well. So what you're going to see is, a lumpier backlog trend. It's not going to be every quarter up and to the right. It's going to be some quarters it's going to be flat, might be down a little bit, and it'll take a huge step up. And it'll be flat, down a little bit, then a huge step up.
So yeah, we have seen the backlog drop a little bit over the past couple quarters. Hopefully we do see some of these big contracts signed soon, because obviously we'd like to see it at least maintain the level it's currently at.
So what kind of cash burn do you look for this year, next year, and when do you think you guys can turn cash flow positive?
Yeah, so we've not disclosed kind of a longer term cash burn. We're giving quarterly guidance. I would say that one thing that is clear to us is there'll be a big step up this year in CapEx. There's no question about that, and that's really all driven by Neutron. Last year, our step up in CapEx was driven by space systems. We needed to build out some secure lab space for government programs. We needed to build out our photon manufacturing location in Long Beach. We had to build out that reaction wheel facility in New Zealand. A lot of those things are behind us. Now going forward, it's Neutron, Neutron, Neutron. And I would say that, if you look at getting to first launch at the end of 2024, that's not going to be the end of the CapEx for Neutron, because that gets the first one, as I said. So now you got to build your fleet. Now you got to continue to build onto your factories, right? To put that long-term infrastructure in place. So, we're going to be investing for some period of time. Now, when we turn, adjusted EBITDA or cash flow positive is largely going to be a function of when we kind of get over the hump on the Neutron side. Until we get over the hump on Neutron, it's going to be very difficult to sustain any kind of positive cash flow, because Neutron is just so intensive in a relatively short period of time.
So listening to that, I think I might need to push out when I think they're going to hit that positive cash flow mark, which is what I've really been looking forward to as an investor in the company. And seems like Neutron is going to, really cost a lot this year. So just something to think about as an investor. But hopefully the value over the long run will far outweigh what they're investing in it.
Sounds like your cash burn, because of the fleet of 4, is going to be a little bit higher than you thought. So are you feeling like, yeah, maybe we won't do as much M&A, or maybe we need to raise some money? How are you thinking about that whole issue?
So, I would say that we believe we have some dry powder available to do deals. I would say not a tremendous amount, because we did consume about $180 million of capital for the 3 acquisitions that we did when we first came public. The capital markets obviously are pretty closed. We don't want to go and kind of do anything that would put us in a compromised position. So we've got an active funnel of deals that we're looking at, but we've always been selective. We'll continue to be selective. We think for the right deals, if it's strategic enough and we need incremental capital, we can go to the markets for that. So we wouldn't say we're not going to do deals because of where the market is today. But we absolutely see value. One of the things that really sets us apart from a lot of the other aspirational space companies is we have a healthy balance sheet, and we're using that strategically with customers to win business, because you don't have to worry about where Rocket Lab's going to be, and do we have 2 quarters of runway like some of the other people in our market that we compete with. So we're going to be judicious, but we're also still being aggressive and looking to build up the footprint of the business.
Got it.
Yeah. So I know a lot of people have been very gung-ho on wanting Rocket Lab to acquire a lot more companies because obviously we've seen the growth from these acquisitions and they've all seemed to work out fairly well. But I think given how much money we're spending on Neutron and the current climate we're in where the stock price is low, so issuing shares is a little bit painful in terms of how much we're all diluted as shareholders. I kind of hope we don't have to raise too much more money, and I hope they're very careful about any future acquisitions and really just make sure they have preserved the cash on the balance sheet, myself personally at least.
Yeah, and if you look at like, if we were to see some launch related assets try to come to market, we don't think there's going to be buyers for those because the architectures oftentimes are very different. You've already staked out your launch sites and your infrastructure and your test needs. So I think that you're going to see a lot of capital get washed out in this market. I don't think it's going to be saved by M&A.
So yeah, be careful in space investors out there. If you're invested in a company that doesn't have very much cash on their balance sheet, and that's something I encourage you to look at. Adam says he doesn't think, acquisitions will save these companies because the infrastructure and what they have is so different between different launch companies. It wouldn't make sense for, say, a Rocket Lab to purchase a Virgin Orbit. It just doesn't really work. So if one of these companies is looking like it's going to go under, acquisition will probably not save you.
Approaching M&A that folks really want to be part of Rocket Lab?
The acquisitions that we've done, so Doug Sinclair, the founder of Sinclair and Planetary, he's actually taken on a much broader role within space systems at Rocket Lab. Right. And it's like watching a kid in a candy shop, right? He's gone from, he was always known as like this big name in this small satellite new space market. Now he's gotten to work on missions going to the moon and now going to Mars and so forth. So big step up at him as becoming an engineering fellow within the company. You've got all like the CEO of Solero is now the GM of our entire space systems business. Right. You've got the other founders of PSC and ASI all taking meaningful roles within the company. Right. So I think to your point, I mean, I think it's an attractive platform where, even versus whether it's an L3 or a Boeing or whatever, where they get lost in this increasingly large machine, these folks have meaningful roles and they determine the success of Rocket Lab going forward. And all the deals that we do have an equity element to them. So we all have our interests aligned to make the company successful. And we have not seen any meaningful defection of talent. So it's not like the deal closes and talent scatters. I think you've seen that in some of the other deals. We've heard that was the case with Blue Canyon at Raytheon, for example. Right.
Yeah, I've said it before. I love that all these CEOs of the companies they've acquired are staying with the company and taking on larger roles. I think that experience of running a company in the space industry gives them like invaluable knowledge and experience. And if they were all just to sell their company and leave Rocket Lab, that'd be a big loss. So great to hear that that isn't happening and they're staying and continuing to work for the company. That's all we have from Adam's interview at the conference recently. Let's wrap it up with some final thoughts. So a lot of interesting details revealed by Adam in that interview. If you want to watch the full thing, obviously it's on Rocket Lab's investor relation page. You can go there and find it for yourself, watch the whole thing. But I think key takeaways are overall the business is performing pretty well. I'm actually pretty confident about Electron at this point as long as they can get that cadence up. I'm pretty confident on their reusability at this point as well. I am very confident when it comes to the space systems business. Those businesses are already profitable, so not a lot to worry about there as they continue to ramp up. A big question mark is Neutron. It looks like it may take more money and time than we thought, which is a bit of a concern. We'll have to watch closely. Again, I do think it'll be worth it in the long run. We're talking $250 million for this rocket. You look at a company like, say, Relativity, they raised over $1 billion, and that's just a pure play launch company. They don't even do space applications, space systems. It's just launch. So Rocket Lab is doing this on the cheap, even though it's still more expensive than we may have hoped and taking longer than we have hoped to hit that profitability. I know that can be frustrating for some investors whose patience is running out in terms of seeing a return on your investment. Hopefully, as we get closer to profitability and we see more Neutron developments, the stock price will respond before we hit that fully profitable mark. But if not, We may just have to wait for the numbers to really become undeniable, the company to become profitable, and really justify a higher valuation. I hope you liked this video. Please let me know down in the comments what you thought about Adam's comments. Yeah, double comments there. And I hope you have a great week. I'll see you guys in the next video. Thanks so much for watching. Bye for now.